Dear students, we were learning about the health insurance, and in the previous classes we have seen what is health insurance, and mainly we saw what are the types of health insurance. In the health insurance we are aware that there are three types: social health insurances, then private health insurances, and then another one is community based health insurance. In the previous class we dealt about the social health insurance, and now we'll be dealing with another health insurance, private health insurance, and after that today itself we'll see also the community health insurance. What is private health insurance? Voluntary health insurance wherein people can enroll and purchase the insurance product of their liking, paying a risk rated premium. This is a voluntary health, it is a private health insurance. It means a private company conducting the health, giving the health insurance policies. Example: Ashadip plan, Jeevan Asha plan, Jana Arogya policy, Raja Rajeshwari policy, Mediclaim policy. So there are so many. Mediclaim is somewhat familiar to everyone and somewhat famous. So there are star health insurances and various companies of the health insurances are there. Next. Regarding mediclaim, we will see somewhat some information so that we will understand the private health insurances better. It was started in 1986, not of a recent origin. Voluntary health insurance scheme, public and private companies. So anybody from 3 months to 80 years who can afford the risk rated premium is eligible to join the scheme. It is a age limit, you see, very high. I means 3 months also, 80 years also. The premium depends on the age, risk, and the package opted. So it's not same. What are the different packages are provided by them, and age also matters. The risks involved also matters. So the subscribers are usually the middle and upper class, as there is a tax benefit. Say under Section 80D of Income Tax Act, there is a tax exemption to the medical insurance policy holders. That's why many people are going for that, and usually the people who are getting the benefit are middle and upper class. Lower class people are not opting for this. Then pre-existing diseases are covered from the fifth year of policy, provided the renewals are done without break in insurance. So even for a pre-existing diseases, sometimes when you are making a health insurance, the pre-existing diseases will not be covered if you have a sickness already. But in this, there is a facility that if you have a sickness, okay, for 5 years you have to bear, and if you are a member of this health insurance policy for 5 years, then from the sixth year so onwards, even your pre-existing pre-existing disease also will be covered. So when we are speaking about the private insurances, there should be a regulatory body controlling. That's why we have to look into in just as one regulatory body of India, that is Insurance Regulatory and Development Authority. So regarding this, we have to know it because this body controls all the insurance companies. IRDA in short we say, Insurance Regulatory and Development Authority. It was set up in 1999. So Agency of Government of India for Insurance Sector Supervision and Development. The headquarters is at Hyderabad, Andhra Pradesh. Then the composition is there is a one chairman and four whole-time members and four part-time members. These are the this is the structure, organization structure. Then, authority to protect the interest of holders of insurance policies, to regulate, promote, and ensure orderly growth of the insurance industry. The purpose is to protect the interest of holders of insurance policies. See, sometimes the company may fool the policy holders, or it may not be giving just to the policy holders. In such cases, this body will come to help. So proposal to increase foreign direct investment in insurance from 26% to 49%. Even the foreign FDI, foreign direct investments also are increased. Then there is another concept in the insurance we have just in a glance we will go through, that is the third party administrator, organization that processes insurance claims or certain aspects of employee benefit plans for a separate entity. So it's a separate organization, a third party organization which helps the policy holders as well as the insurance company outsourcing the third administration of the claims processing. Example, e-meditech company is a third administrator for Oriental Insurance Company in Delhi. So Oriental Insurance Company asks the help of a e-meditech. This is a third party administrator which helps the insurance company as well as the policy holders. So there is a concept another, insurance ombudsman, and for our study it's not required, so I'll just skip it. So now move to the issues in private health insurance. What are the issues in private health insurance? Many times insurance claims are rejected due to small technical reasons. This leads to disputes. See, sometimes in the private health insurances always disputes are there because insurance claims are rejected due to small technical reasons. There may be a slight problem and you have paid so much premium and all, but you are not getting any benefit. It's possible. Then another issue, the most important area of dispute is the knowledge and implication of pre-existing conditions. So what are the conditions of the policy holder, what is actually his sicknesses and all. So whether the sicknesses were pre-existing or now, it is not easy to identify. Then there is no analysis on what is fair practice and what is unfair practice. So many of the private companies are existing and they are practicing, and what they are practicing, is it fair or unfair, why, how much they charge, is it fair or not fair, what are the facilities they are providing, is it just or not just. So such analysis are nowhere there, but IRDA authority is there to control them. High premiums, yes, some of the private companies charge very high. Then now we'll be moving to the third type of health insurance. So we saw social health insurance, then we saw private health insurance, and now we are going to community health insurance. So what is this community health insurance? Any not for profit insurance scheme aimed primarily at the informal sector and formed on the basis of a collective pooling of health risks, and in which the members participates in its management. So it is not for profit, yes, and aimed primarily at informal sector and formed on the basis of a collective pooling of health risks in which the members participate in its management. It may be for one community or one geographical area, such a scheme is made. So for one community, that's why it is called community health insurance. So what are the characteristics of community health insurance? We'll understand the concept better if we go through the characteristics. Community based social dynamics and risk pooling, where the schemes are organized by and for individuals who share common characteristics. So this health insurance is for the individuals who are having a common characteristics. So common characteristic may be for a particular geographical people or occupational people or ethnic people. Take example, insurance is for a particular construction workers, then it becomes a occupational. So solidarity, where risk sharing is as inclusive as possible within a given community, and membership premiums are independent of individual health risks. So it is a concept is independent. So it is designed for a particular community. So some more characteristics have. Another one is a participatory decision making and management. So community health insurance is not a private, therefore it is participated by the members itself and managed by themselves. Then it is a non-profit character. Intention is very clear, not to make profit but to help the other members. Then voluntary affiliation, it's not forced. Nobody is called that you have to go for insurance, unlike the ESI and all. It is a voluntary, they can join or quit. So these are the characteristics of community health insurance. Now There are famous community health insurances in India, which are they? Just in gist, we'll be seeing after that. Yashaswini scheme we have, then Karuna Trust we have, Seva scheme we have, Accord scheme we have, Rajiv Arogya Shri community health insurance scheme we have, Kalainar insurance scheme we have, Vajpayee Arogya Shri scheme we have. See, these are the community health insurances in India. So, in little gist, we'll see all these. So Yashaswini Cooperative Farmers Health Care Scheme. This is you by the word itself you are clear. So Yashaswini is for the group one group, and that is farmers. So what all things are there in this we'll say. Covers cooperative farmers of Karnataka. Inaugurated on 14th November 2002, operationalized in June 2003. Beneficiaries contribute a small amount of money every year to avail any possible surgery during the period. Implemented through network hospitals to provide cost effective quality health care facility to the cooperative farmers. So, nearly 823 defined surgical procedures are there. The maximum benefit is up to rupees 2 lakhs. So, above than that, not paid. This is a Yashaswini scheme. Then some of the features of this scheme we will see. A person should be a member of rural cooperative society of the state. So rural cooperative society should be a member. Then family members of the main member are eligible to avail the benefits. It is not only the one member but all family members are included. Each beneficiary is required to pay prescribed rate of annual contribution every year. Presently, 2013-14 member. So in the 2013-14 member contribution is rupees 210. Now we know we don't know. The higher age limit fixed is 75 years. So after that they can't get. Scheme covers entire state of Karnataka, particularly rural areas, excluding corporation and urban cities. So it is only for rural people, so not the city people or urban people. Then another scheme, Seva scheme. So self-employed women's association insurance scheme in Gujarat started in 1992. It's in a Gujarat, and this scheme is for self-employed women. So the insurance scheme called Vimo Seva proposes a composite package simultaneously covering life, assets and health care while also providing maternity benefits. So this looks after even the maternity benefits. The insurance plan is open to all women operating in the informal economy and their families without any age limit. Premium per year is rupees 175 to rupees 375 payment. Then maximum benefit is up to rupees 75,000 only. So Yashaswini is up to 2 lakhs, but this is only up to 75. Next, Karuna Trust. So principle of PPP, public private partnership. Here it is a public private partnership. It is not only the private or public, it is a public private partnership. Began with management of a PHC at Gumballi in Yalanduru Taluku, Karnataka. So it started in one particular area, has expanded to include 50 PHS public health communities in partnership with the state government of Karnataka, Andhra Pradesh, Orissa, Arunachal Pradesh, Manipur and Meghalaya. Equal focus on promotive, preventive, curative and rehabilitative cares. Then the purpose of trust is it provides community health insurance for a low premium of rupees 22 per person per year. So key features, no disease exclusion, all are covered. So immediate settlement of claims. Then rupees 50 per day as compensation for wage loss for inpatient. So those who are in hospitalized, for them 50 rupees are paid. Then rupees 50 per day out of pocket expenditure. Then rupees 500 for patients who undergo surgery in addition to rupees 500 for drugs. These are the various facilities that those who are under the Karuna scheme they can get it. Then Accord aims Ashwini, Accord AMS Ashwini AAA Community Health Scheme. This is another one. Accord is a local non-governmental organization staffed by a group of professionals and Adivasi youth. So this was began by the Adivasi youth, established in the year 1986. It works exclusively for indigenous groups or the Adivasis. So this is for the Adivasis of Gudaluru Taluku, Nilgiris district, Tamil Nadu. So Gudaluru Taluku's Adivasi people, they have created this Accord health community health insurance scheme. So the purpose is action for community organization, rehabilitation and development. So it is the main purpose itself we are clear. So rehabilitation and development purposes are there of this scheme. So Ashwini Association for Health Welfare in the Nilgiris and AMS Adivasi Munnetra Sangam. So these are three together combined. So the health program consists of a two-tier structure, a network of 7 health centers manned by medical assistants and a 20-bed hospital with all basic facilities including obstetrics and surgery. So better facilities are provided. The health centers provide a mixture of curative and preventive care. Both curative and preventive care are provided. Those between 6 months to 60 years are eligible to enroll as per the NIASC, New India Assurance Corporation guidelines. So 60 years, from 6 months to 60 years is the coverage of this scheme. Next scheme we have Rajiv Arogya Shri Community Health Insurance Scheme. So this scheme, Rajiv Arogya Shri Community Health Insurance Scheme, started as the private public model. So it is a combined model, private public management for all the families below poverty line from 1st April 2007 in Andhra Pradesh. This has started in Andhra Pradesh. Beneficiaries for the this Rajiv Arogya Shri Community Health Insurance Scheme are identified through the white ration cards provided as part of the Annapurna and Antyodaya Anna Yojana scheme for BPL families. So this is for the poor people. Covers nearly 8 crore people who live below poverty line in 23 districts of Andhra Pradesh. This one people are very beneficiaries are mentioned very clearly. So 8 crore people and who are living below poverty line of the 23 districts of Andhra Pradesh. The state government is the sole funding agency for this health insurance scheme. So, this community health insurance scheme is funded by the government. Then Kalainar Insurance Scheme. It was started in 2009 in Tamil Nadu. The government, in contact with the Star Insurance, has put in place an insurance program for families earning rupees 72,000 or less annually. So this is also for poor families of the Tamil Nadu, 72,000 and below. So biometric smart cards issued. So the style is biometric. So 1.43 crore families are enrolled this. Then Vajpayee Arogya Shri scheme, launched in Karnataka in 2010 to improve access of BPF families, 5 members, it covers only 5 members of the family, towards quality tertiary medical care. So identification of beneficiaries through BPL ration cards. So it is not for everybody, only to holders of BPL ration cards. Government of Karnataka trust will pay the premium on behalf of the BPL beneficiaries for the insurance. It is the premium is paid by the government. Sum assured will be 1,50,000 on a family floater basis per year for per family. If at all any sickness come, 1,50,000 medical assistance is given. So some more information regarding Vajpayee Arogya Shri scheme. So objectives: to cover catastrophic illness, sometimes catastrophic illnesses will come. Then universal coverage of BPL, rural as well as urban. Earlier we saw one scheme is covering only the rural people. This one both rural as well as urban. Catastrophic illness can wipe out decades of savings of BPL families. So we are aware some catastrophic sicknesses come like cancer and all, they kill the people. Then to protect the lifetime savings of BPL families which would be wiped out in case of catastrophic illness, this is what the main uh, aim of this scheme. So now we saw various schemes. Let's move with another topic, that's problems in community health insurance. This is connected with the community health insurance itself. What are the problems? Problem of adverse selection as premiums are not based on assessment of individual risk status. So we are not sure because we are not selecting them on the individual risk, we are selecting a community, so that is a problem. Then fail to include the poorest of the poor, so sometimes poorest of the poor is just left out. Then they have low membership and require extensive financial support. See, so much government funding is done and the membership is very low. Then poor design and management, so some are mismanaged, so some are not managed properly. So here we have concluded the types of health insurance. Now, what is the way ahead for health insurance? So health insurance has become one of the most prominent segments in the insurance space today and is expected to grow significantly in the next few years. So it's growing, we are aware. So that's what the future of the health insurance, because people are aware that they should have the health insurance policy to protect themselves during the adverse times. A World Bank report estimates that about half of the country's population can be covered with health insurance by 2015. Then the main challenge is to see that it benefits the poor and the weak in terms of better coverage and health services at lower cost. So the main aim has therefore in the future its aim is to cover the poor people and give them some health benefits. So now, when we speak about the health insurance, there are some many things are excluded. What are the exclusions in the health insurances? That will just glance through. I will read it so that you can understand. So exclusions in the health insurance. Some this one, some illnesses or some aspects are not included in the health insurance. Yes, we know that we saw different types of the health insurances, and each type excludes each one. In generally, many are left out completely. They are here. The following are generally excluded under health policies. All pre-existing diseases. The pre-existing diseases exclusion is uniformly defined by all non-life and health insurance companies. So, this pre if you have a disease already, then that is not taken care. One. Second, under first year policy, any claim during the first 30 days from the date of cover for sickness disease, this is not applicable for accidental injury claims. So now you have started your insurance policy and within 30 years getting sick means the doubt arises that you are already diagnosed. That's the reason it is excluded. Then during first year of cover, cataract, benign posterior hypertrophy, hysterectomy for menorrhagia or fibromia, these are all medical terms. So hernia, hydrocele, then congenital internal diseases, fistula in anus, piles, sinusitis and related disorders. So these are excluded because these are not considered major risks and these are common. Then some more exclusions. So circumcision unless for treatment of a disease. So circumcision cannot be considered as should be funded because only in the case of disease, yes. Cost of specs, contact lens, hearing aids. So these are all related to your eyes and ears. Dental treatment surgery unless requiring hospitalization, some minor dental treatments are not covered. Then convalescences, general debility, then congenital external defects, VD, international self injury, use of intoxicating drugs, alcohol, AIDS, expenses for diagnosis, X ray, or lab tests not consistent with the disease requiring hospitalization. So some of the diseases, these are all the laboratory expenses and connected to a particular disease is only taken to the task. Simply taking these things are not encouraged. Treatment relating to pregnancy or childbirth, including cesarean section, this is also excluded in some of the schemes, not every. Now for example, ESI schemes pays for this. Then naturopathy treatment, yes, that is uh, usually done for higher benefits and not a requirement, naturopathy treatment. So the actual exclusions may vary from product to product and company to company. In group policies, it may possible to waive, delete the exclusions on the payment of extra premium. What it says is there are so many other exclusions also. It is all depends on product to product, means policy to policy. Some exclusions are there, and company to company which are offering the insurance scheme. We can't stick to the one scheme. So there are many exclusions depending on the each scheme, but generally these are excluded in the health insurances. This doesn't come under health insurance. So we saw all concept about the health insurance, and I'm sure that mainly our focus was on the types of health insurance and the basic information about the health insurances. And now in the next class we will be seeing another concept, that is a life insurance. Thank you.